Yo, yo, your boy Rapture. We'll get this underway in just a minute. Just getting those posts set to send out. We've got the New York opening bell in just a couple of minutes. Let's pull up the chart so we can watch what takes place during those opening minutes. I'll turn the volume down on the music in a moment. See what happens. Opening reaction. Got BTC up. Oh. There we go, opening bell. Let's see this reaction off the open. Yo, yo, it's your boy Rapture. Got the New York Open here. I'll turn this down in a moment. Just monitoring the open here before we get going live. right, we're getting a little bit of sell-off here in the open. Let me turn the music down. There we go. Let me get this banner off the screen. Yo, GM, lads. GM, lads, what is good on this fine Wednesday morning here for the New York Open? Apologies, we didn't get this session happening yesterday. It was a bit of a hectic one. It was up super late Monday night. Working on some things. Always working. Just monitoring what happens here. Let this New York Open develop. Let's bring the session levels up. How's everybody doing? Let's check in on the chat. JJ, what's good, my homie? Always a pleasure to have you here. Thank you so much for joining. On this Wednesday morning. Okay, we got our session levels up. Let's take a look and see what we can see here. All the session levels really clustered in. Asian high, Asian low, London high, London low. It was a really tight session. We're now projecting off of the London low. Let's let this develop a little bit more before we look for some trades. Holding that H4 swing low. What happened yesterday? Yesterday, we put in a deeper SFP of the daily range low, currently trading just below it right now. Still going to let this develop a bit more. Not a bad reaction out the M15 level here. Is it possible that we've put in the low for the New York session here, recapturing the Asian low? We will see. I'll let this develop a little bit more. Underside tag into our moving averages, but this is the M1. It's a lot of noise. It's tradable, but it's a lot of noise. I'm gonna let that develop a little bit more. Let's pull this up. Welcome to another Rapture Scalp and Swing Sessions number 10 live perps trading and analysis for the New York Open show. We're going to take a look at BTC, ETH, Sol, Hype, see if we can find some live trades to take, live trade setups and low time frame execution. Don't forget, these shows are now brought to you by BingX. Use code Rapture at sign up for bonuses and exclusive perks. Link in the description on YouTube. Oh, and you know what? I just remembered I need to post that link on Twitter. Give me a moment. I'll pull the chart back up so we can keep monitoring. How's everybody doing today on this fine morning? It's a bit chilly where I am. It's not usually cold at this time of the year, or it's not usually cold very often where I live, but it's been cold. We've been feeling the chill recently. Having to wear layers and sweaters, which is very unusual for where I live. what am I doing? Excuse me. Just gonna add that. There we go. Popped it on as a reply to the Twitter post. Oh. I'm going to do a lot more live monitoring today and looking for those trade setups as they unfold. We can take a look at our high time frame levels as well. You know, I'm all about having my high time frame levels marked out in advance, and we're currently showing some rejection into one right now. Let's see if that's an H4, H12 level. So that's the swing low. That is the swing low, the daily swing low that we're projecting off currently, right? This level here is what we're rejecting off right here. That's that level right there. We'll pull my levels off. You know, I was having a chat last night with one of my buddies, actually someone who went through a month-long boot camp with me, a small group boot camp, and we were running his final Q&A in a one-on-one environment, just as an opportunity to get feedback, direct feedback, and ask questions that had been lingering about what we went over. During that process, he was really curious about how I'm using the indicators. And I don't know if you guys recall, but I've mentioned a few times that I've debated removing the session levels, right? The key levels from Leviathan, right? Debated whether I leave them on or not. I haven't quite decided yet, but I did come to the realization is maybe as an exercise during these lives, we take trades off of those and see and compare off of those for low time frame scalps and intraday trades compared to waiting for my high time frame levels, and do a A/B comparison to see what is yielding not necessarily better results, but what is more actionable. Like I pointed out, this is exactly where we came into my high time frame level, right? Like it's all about building layers. I'm all about layers. I like my primary signal, my high time frame level. And then after that, I like my mid time frame signal. So what's a high time frame signal, right? That's things like an SFP off of a daily level, off an H12 level, off an H4 level, right? Like here's our H4, let's pull it up. It's getting a bit busy on this chart when we have all the indicators up, but these are our H4 levels of interest and H12 and daily levels of interest. So we got our signal from our high time frame level. Then we go to mid time frame, be it an H1, right? So here's the H1 breaker, right? It's a market structure shift breaker, right? It's not the break level breaker, because that would be up here. And when it's that wide, I tend to shift from looking for the market structure break level, which is up here on hourly, to the market structure shift level. So if we get a close above there, that's a higher probability long than trying to take anything from within here. I'll often use, if I'm starting to get signals aligned within here before the break, you know, like an H1 SFP, but you can see how that failed. There's one right here. You can see how that failed through. But I'm looking within this region for a reason to get long. But as you can see, we're underside rejecting off of that daily swing low. Right, there's the level there, the interactions. Those are the type of interactions that I look for. I like to let price develop a little bit after the New York Open. That extra volatility is great, but it can also lead to shakeouts to both direction. So here we are with the indicators back up. So over the coming live trade sessions, the New York Open sessions, I'm going to run some experiments with just using the key levels versus my personal high time frame levels. Right, but there's a lot of confluence. That's the whole point behind throwing up indicators and using signals like that, is that you're looking to give you want the visual reference to make your split timing decision making very quick, so that you can say yes or no. You can hit the bid. You can slap that bid button quickly or not. You don't want to be having second guessing and delayed thoughts. You want to be able to respond very quickly. And that's what the indicators do for me, is they add that quick visual reference, right? We're going to let this develop a little bit more. While we're doing that, I think what we should do is just do a quick review of our high time frame levels, right? Like, I know I'm talking about these key levels, the indicator from Leviathan. Oops. Maybe it's a good time to talk about what the levels are that I use. I use different ones on different time frames. And the lower the time frame it gets, the more granular with the levels I get. So on the M1, we have our session levels, right? Like, we have our New York Open level was up here, right? Which is at 8 a.m. Not the opening bell, when the New York Open, when the New York session window opens. I like that 8 a.m. Eastern time open. We've got New York low, New York high. Where's the New York high? It is hidden right now. Why is it hidden? Let's take a look. Sometimes when there's overlap. Yeah, so sometimes when there's overlap. And you can see how granular you can get on the key levels sweep by Leviathan. It's a wonderful indicator. I used to use the Spaceman BTC levels, but I found it wasn't as granular and it wasn't as customizable. You know, you can put static moving, not static, but you can put horizontal moving averages, horizontal VWAPs, your day levels, so your Monday range, or whatever day you like to map a range out for. Your POCs and value area levels, if you're more of a TPO or volume profile style trader, you can get those mapped out. And on different time frames, right? Like, you can adjust. It's so granular, this indicator. So shout out to Leviathan. It's a wonderful tool, right? You can tell it if there's a certain amount of distance, if it gets within a certain distance between the levels, that I can merge them so that they're not, you know, like here it's a little bit muddy. You can see there they're sort of really close to each other. Oh, we've got the Asian low, Asian high, London low, London high. Price was trading within a really compressed region during the overnight. We've got our daily open level, which we also came up into on that move. Daily open often acts as a area for trades, right? Like, you just think about the daily candle and what does that mean? So when the candle opens, if it trades up and then back below the open, that's just you're setting a wick, right? You're setting the upper wick. Similar, if you trade below the open and then recapture it, then you're setting a lower wick. Maybe we're setting a lower wick on the daily here. We've also got the previous week low. Previous week high isn't on here because it's all the way far up. And what happens when you do that? When you leave them all on there, here, I'll show you. So I put the previous week high, that level is going to be all the way up here. Someone's going to compress the shit out of this. So I use this dynamically. And what does that mean is that depending on where price is in relation to things, I'll make changes. And I'll put certain things on, like, so we have our Monday range. Let's see where that is in proximity, right? Monday high, Monday low. Seems relevant. We came close down into the Monday low. It would be nice if we actually took that out. So that's good to know. We're trading in close proximity to the Monday low. Maybe we trade below here for a while, recapture it, and there's a good long. Right now, we're just chopping around in here, right? So depending on where we are in relation to certain levels, I will adjust as needed those levels. Very interesting too. The Tuesday high and the Monday high were very similar. Yesterday, we didn't quite take out the Monday high. All right, we can go back in time to over here. And as I was saying, on different time frames, I'm using different settings, right? Like the higher the time frame you go, I don't want it to get too muddy with levels. I'm all about price action and price action into those levels, but I want to be able to see the candles first and foremost, right? Same with my moving averages, right? Like on here right now, the H4 EMA 200 is not currently present because if I pop that on, it's going to bunch everything up. See that? So it's all about being proactive and reactive about your workstation so that you can give yourself the cleanest line of sight to price so that you can execute. This M15 SFP into here is really interesting. I would have really liked it to just take out the Monday low and then recapture. You know, similar to what we did here. It took out the Monday low, recaptured. Wasn't a very, right? It's been a very choppy into this region here though. So like market seems very indecisive about where it wants to go at the moment. Change this music. We've been listening to it a little bit long now, a little long in the tooth. Switch it up. Ooh, a little bit more soulful. By the way, if you guys ever have questions about the indicators that I'm using, of course, please pop them into the chat and I'll get to them. Yeah, I'm not really digging price right here for a trade yet. So let's switch that up. Let's take a look at our high time frame levels. So what do we have? BTC, daily swing high, daily swing low, the range, the bearish daily range. We've been SFPing this low, but now we're back below it again for a third day in a row, right? We had the initial SFP on Monday. Tuesday, we dipped way below and actually took out the weekly level. Sorry, took out the monthly level, right? Posted that in my Telegram channel when it was taking place. Rapture's trade book, which you can find the links in my bio on Twitter or from the description if you're watching or joining from YouTube. All right, we're into that monthly level. I know I'm more about monthly closes. I stress that a lot, but at the moment, it's about finding where it might find a trade. And that's still a bit of a distance there. If we start trading further back below, then I'll adjust this. But for now, this is where we're finding a bid. It's where price dead stopped, right? Here on weekly, so that weekly range quarters that we set on Sunday is no longer valid as we're trading below that level. So we don't have our weekly swing low yet, but we can still leave them up as a guide and we'll adjust accordingly. Actually, you know what? Let's remove it for now so it's not muddy, right? So there's weekly levels of interest, right? It's highlighting the significance of a weekly SFP. We put in a weekly SFP last week. well, more of a sweep because this was a previous SFP level. So we've now SFP'd that low, but the monthly level right there, I think, is the more significant one. Pop down to daily, right? Not great that we're losing that level. H12, levels of importance, right? You see as we go down lower and lower time frames, we start marking out more relevant levels so that we can trade the potential interactions. If H12 can close above here, off of that weekly SFP, like say this eventually trades and we close back above here, that would be quite bullish. Because up here, back at all-time high, it was a weekly SFP followed by an H12 bearish breaker, close below, retest into the zone, boom, and that was the Pico top. That was the Pico top. So it would make sense that if that's what a top looks like, that a bottom would also form off of something like a weekly SFP. And then we'd be looking for that H12 breaker, which would mean getting a close above here. Let's go down even lower, H4. H4, it's a lot of levels going on here, right? And I might have to clean some of this up because it's starting to get a little bit jumbly. Let's take a look. What might I remove from here? All right, we can see yesterday, that H4 level, the importance there. On Monday, that level there, the importance on H4, right? SFP there. That's why I'm all about the H4 and above swing levels to frame my trades around. And look at that daily level acting as the exact. I still want this to develop a little bit more. Let's take a look at ETH and Sol, see what they're doing, see what they're looking like. Okay. We still have yet to set the ETH daily swing low. Did I not adjust this chart last time? On Sunday? I feel like I did. What is going on here? Ah, I see what's going on here. There we go. There we go. There we go. Thought I had it. It was just monitoring a different watch list. A watch list that I used during boot camp trainings. So ETH as well, into that daily swing low, right? This is our daily range. This is our daily range low. We're trading for a third day in a row, probing below that swing level, the range low. Not great that we keep just retesting below the levels, right? If these daily SFPs were going to hold, we want to see momentum start to build for the long side. We're just not getting that. Let's take a look at Sol. Right, same thing. Now, I pointed out on Monday that Sol front ran the swing low. Well, now it's below it and looking rather dangly dongish. Yes, that is the technical term. It is looking rather dangle dongish. You know, I've repeated this phrase multiple times or many times over the years. I like to look for reasons to get bullish or look for a reason to get long at range lows and bearish or a reason to get short near range highs. So I wasn't overly compelled to keep pressing short down here, but this is what the market's giving us, right? Like you have to be very real about what's taking place. You know, I've been bearish from a bias perspective since back in this region, right? I've been bearish shortly after we put in that. Once this took place, I immediately was shifting my bias. Then we got a bearish weekly breaker, right? And that's pretty high time frame. All right, this was your weekly breaker, closed below, and it's been down only ever since. We didn't even, it was so weak, it didn't even give a retest into the breaker, right? If we zoom right in, like it was trying to hold, finally lost it. It was so weak, it didn't even give a retest into there. So that's why I like on weekly, looking for things like H12. This is what I outlined here, right? And that gave you H12 break, retest into the zone, dump a Reno. So let's bring this back to not looking so hot. It's not looking so hot. It looks like that. This might have been the optimal short, right? Into the daily level, into the daily open, retest with an SFP into it. Well, we're not currently short, didn't catch that. Letting this price action to develop a little bit further before making any decisions. Give me a moment, lads. I will be right back. Just monitor price. See if you can recognize the signals that I look for. And when I get back, you guys see if there's a trade developing. There might be. I mean, we took out the Monday low now, right? We've taken out Monday low, getting back close to that monthly level. So I'm going to let this develop. I'll be back shortly. Yo, yo, I'm back. Apologies about that, everyone. Just had to have a quick IRL chat. So, of course, as I got off, what did we have? We came down into that weekly level or that monthly level. Aggressive late market sellers, bubbles piling up, sweep on the 1 minute. Where was your long? Fuck. Well, hopefully, as you were watching it live, some of you may have recognized what those signals are. Right? We're waiting for a price to get into a high time frame level. We're waiting for the signals to start lining up. Late shorters aggressively pushing the market sell into the level. That's my trigger to get long. Ah, damn it. I'm annoyed that I missed that. But that's what I look for. So hopefully as you were watching live while I was taking a quick 5 minutes to chat about something in my office, hopefully you were recognizing those signals, right? One moment. Let's switch up this music for a second. So how would I have taken the execution of that? I was sitting at my desk. That's okay as well. Watching price come down. Right? Hot out more here. I was like, it's coming down at a level. If you can see, it would be a trigger, right? Opening as aggressive market triggers to the level. Take it out. Sweep or SFP the level. I'd enter off of that close. And I might scale. And what I mean by that is not put a full position right off that in case it comes down a little bit more. But I would start scaling like 10%, 25% of what position size I would usually put on. And if it starts moving away from me, at least you have a position in. The next trade, because you don't want to be entering here, would be flip this box, put in the M1 breaker, the bullish breaker, catch a retest, and there you go. And what sort of targets are we looking for, right? I tell people often, if you're new to this style of execution, using our high time frame levels, super low time frame execution, like the M1, what would that look like? Well, you get that signal there, put in your entry, right? And look at that. You got your 2-to-1 already out of that. Even so, I've mentioned a few times, I like to use a manual stop when I'm trading this way. Like a hard stop doesn't make as much sense to me. I like if the price action starts to go in a way that doesn't look like what I'm looking for, I'll cut early. So I use a manual stop. But if you were to put a hard stop, it's difficult to say, would you just put your stop there because it's such a short distance? This is why I like the manual stop. But let's just say for shits and gigs that you're like, okay, I'm going to give it a little bit of leeway. And then if it comes down below, I will manually cut. Right? Like I would never put a stop that wide on a trade like this, right? But let's just say, okay, you put 0.5%. Look at that. That is 2-to-1. That's more than 2-to-1. Where did this end up getting to? The 3-to-1 in just that little move right there. So you may say to yourself, and this is what I recommend for people new to this type of execution, is just target 2-to-1 and close out your trade. Who cares if it keeps moving further? It's all about putting in reps to build that execution reflex, right? I was speaking a little bit before about the conversation I had last night during the Q&A session And I was speaking about a drill that I learned during my time in the stable. Shout out to Ryan, the flow horse over at the stable. A drill that I learned there that I found extremely useful while developing my low time frame chops was you hit a level of interest, and what you do is you just train yourself to just hit the button, the buy button, and then exit very quickly at break even. No losses, no gains, just at break even. And it just trains your reflexes to be able to press buy or sell really quickly without hesitation so that you can adapt to the conditions and have that feedback and have that, it breaks down that hesitation in your brain. Because how often, we've all been guilty of this, how often do you enter a trade, no stop present, and it starts trading against you, and you just let the thing fucking keep going, and you're like, oh, maybe it'll come back, I'm just gonna let it keep going, until all of a sudden you're like down half your account. Please don't ever do this. Like, I know I talk about using manual stops. It's a very advanced way of trading because you need to have the ability to just say, fuck it, I'm cutting. You need to be able to, you need to have no hesitation in that and be okay with whatever the trade outcome is after you've cut. Proximal AV. So what I recommend, he's asking about exchange. When you're working on this strategy, I highly recommend using something like a no-fee DEX, specifically when you're developing your chops doing this, because you can get in and out really quickly. This is just for running drills, right? Just running target practice. If you're making proper trades with size, you have to use an exchange that can accommodate that. Shout out to Bing X. But for drills like this, just use a DEX that is low or no fee, because then you're losing nothing. You can literally get in out of the trade for zero loss, right? You're not going to encourage slippage, etc. I'm not saying to open $100,000 positions or $1 million positions doing this. I'm just talking about throwing $1,000 in there, putting it on 10x, and just really focus on that reflex, right? Like, what would you do here? Like, yes, this was a good level to be taking a trade off of, and in hindsight, you might be like, well, why am I? It's not about what happens after, right? What we prove time and time again during these sessions is how frequently trades set up and how easy it is to get a 2R, right? Like, if your goal is to grow your account portfolio by 1 to 2% a day, which is very respectable in a career that you can have, and that's on the low end, is just to get 1 to 2% account growth per day, and depending on the size of your account, 1 to 2% account growth consistently is a very good life. And what I show using my high time frame level, low time frame execution approach is how frequently 2R takes place. That who cares what happens after the trade, right? Like, this was the exact conversation I was having with my buddy last night. It's like, everybody has this feeling in crypto, like, because the moves can be so exaggerated and provide a lot of upside, that you get this feeling of FOMO if you're missing a trade, or if you close early, or if you cut the position. Don't worry about what everyone else is doing, because yes, there's a lot of guys that hit very large exaggerated moves, or the guys that YOLO trade and catch those 10x trades or whatever. But in between that time is a lot of chop and a lot of drawdown. Whereas approaching it this way, from a very consistent business perspective, where you're showing up to your desk, taking your trade, executing your trade, having a benchmark, like, I'll say this, don't ever approach it from saying, I have to I have to extract this much from the market today, or I have a weekly profit target or a daily profit target. That's not a great mental approach. You just want to aim for consistency, right? And now we're seeing this starting to roll over. Even with this wider stop that I would be manual about it, right? So even with this wider stop, like if we tighten this up to where that low was, all of a sudden that's 11 to 1. Now, you know, I'm not trying to give you unrealistic targets but that is possible. And this is how I trade. Manual stop, so I don't put a hard stop. I will monitor price action. And if it starts to look in a way that looks unfavorable, I will cut early. But say you use this wider stop, right? That 0.5% that I was talking about, which you can set these things up depending on the exchange that you're using. You can predetermine your stop distance, whether it be off of pips or whatever, but you just put something like that and set a 2 to 1 or a 3 to 1. Had you been like, I'm just going to hold this and see what happens, well, now you're coiling back towards break even, right? Now we don't know what's going to take place after, and I don't really care. You already had your 3 to 1. Even on a 0.5% account risk on that trade, if that's how you like to be, especially using these more scalping approaches, if that's the max risk that you're comfortable with putting on in a trade, that's 1.5% account growth, right? If you set it to, that's 1% account growth from that one trade. If you set it to 2R, right? If you only use 0.5% risk of your account on a 2R, that's 1% account growth consistently, right? And you can bang out trades like that all day. Like, right, we had that one short here into that level. We didn't get bubbles, but we did have the averages as confluence into the daily low, underside SFP into the level. Like, what did this provide? Right? What did that provide? So I'd enter after the close. So you're monitoring that candle. M1 closes. You're immediately pressing the sell button. Like, let's give it that same comfortable 0.5% stop, right? So you'd be somewhere in there. This is 2 to 1. What did this end up yielding? Even with that wider stop, if you just target that level, that was a 4 to 1, right? All in the span of, this has been since 950. We're now at 1020. 2 trades on 0.5%. That's 2% account growth and 1% account growth. That's 3% in your account in 2 trades in the span of an hour. You're telling me you can't build a career doing that? You're telling me you can't be consistent doing that? Like, who cares? And this is something that I stressed with them last night. I was like, who cares what the fuck takes place? You have to know what type of trader you are and what your personality is and what your temperament is. And something I really learned about myself over the last year when I took time off and reevaluated what was important in my life and how I wanted to live my life and where my strengths really lay in trading. And I discovered about myself a few things. Hey, I hate being in fucking drawdown. I know everybody dislikes it, but I really fucking hate it, especially if I can execute really tight on low time frames. I fucking hate being in drawdown. That was one thing I really learned. 2, or B, I can't remember if I said A or 1, but B, I like intraday trading. I don't like holding for long periods of time. I like to take my trades and then be done for the day. So I like my trades to take place quickly, and I like to be rewarded for them very quickly. I don't like sitting around waiting. Like, you can 100% be successful and make a career from trading just high time frames, like high time frame levels, high time frame execution. You 100% can make a career out of that. But your win rate is gonna drop dramatically, and your RR is gonna be smaller. But because you're able to put a different amount of size on, like for a daily level, let me zoom out here for a second. We're into a daily level here, right? We're into daily levels. This is our daily swing low. If the H1 puts in that breaker and you long the retest, you can put on a much larger position size, but you're only capturing a smaller amount of R, right? Like maybe you're targeting a 2 to 1 or 3 to 1, but on a larger position size. Whereas the way that I'm approaching things on this low time frame execution, trading intraday, on a 0.5% in that short span of time, you're capturing the same amount of account growth in 2 trades, and you could say to yourself, I'm done for the day now. I just put on 2 to 3% on my account. I'm done for the day, right? And so something you have to, I'll circle back to what I was talking about, was realizing the type of trader you are, what type of personality or temperament you have, and what type of trades you like to take. You have to be realistic with yourself. Can you trade like this? Or do you prefer a much more hands-off approach? Like, this is a very high-touch version of trading. It's very focused and attentive and real-time. And you have to have the ability to cut when you see stuff that you don't like, and to ruthlessly take your profit. Because how often will we see that it gets a 2R, 3R, and then reverses full and you're back to break even, or below where your stop was, right? Like, this is looking like it wants to keep going up, and we put in another signal, right? This is our M1 breaker. We put in another long signal there, the SFP within the breaker. But I really like these trades, the initial point of impact, when I'm getting those things like the bubbles into a high time frame level, high relative volume. You see those let me get rid of this. You see these colored in bars? That means the relative volume compared to a certain back look of candles, the volume is spiking here into our level. Late aggressive market sellers into the level, that's an instant trigger. And you get that first trade, your tight is super close because you know where you're invalidated. If all of a sudden you're trading down here, I wouldn't even let it hit something like a stop like that. I'd be out before that. And if it starts to recapture, then I look for the next trade, right? So who cares what happens after this? It's very liberating and freeing mentally. It like removes so much from your mind when you stop caring about what the market does, and you just trade the levels, and you do your business, and you go about your life. When I'm not in a trade, when I'm not at my desk, I could care less if Bitcoin is going up or down. I could care less because it doesn't matter. I know there's always going to be a trade. Majority of the time when I sit at my desk, you have to pick your days. Like, Saturday is probably not the greatest day to be looking for trades, although this past Saturday, there was a lot of short opportunities and a lot of volatility. But you have to be okay with that. You have to tell yourself, or you have to ask yourself, what type of a trader are you? And once you get to a place where you just don't give a fuck if we're going up or down and what happens after your trade, and you just approach it from, I'm here at my desk, I'm looking for a trade, I'm not forcing anything. If I get what I'm looking for, I take the trade, and if not, I just don't have a trade in that window. For me, at least, it's been much better for my life to not feel those feelings of FOMO. Like this is starting to move further. And a different approach would have been, okay, get a secondary entry here, or compound because you still think it's going to go up, like add more position and target some of the other moving averages. But you've already had your trade. I'm not saying this version of execution is easy, because it's not. It took me a while to really nail down this process of back testing and forward testing and live testing for like 12 hours a day for months to really nail down and drill down into this approach that I use. I think it's a bit of a unique approach. It combines the systems and processes from a lot of great traders that I respect and learned from. But what I've done over the years is taken little bits from my journey of learning from other people. I've taken little bits and taken the parts that make sense to me. There's no such thing as a one-size-fits-all approach to the market or a one-size-fits-all approach to trading. I think that's where people get a little bit caught up, is it leads them down a path towards infinitely looking for the next or the next thing that could help their trading. I believe in iterating and testing things out, but it's to take the pieces and incorporate it into your own process and system for what works for you. And this type of trading is what works for me. This type of trading is what works for me. And sure, there's moments after I've taken a low time frame trade and I've closed out and that was it for me for the day, that you look back and you're like, oh my God, if I just held that. But that is a defeatist mentality. It also comes from a place of scarcity, because within a time frame of holding a trade long, like a high time frame trade, to get a 2 or 3R on larger size, I'm able to take multiple trades. Like, I like to be active. I like to be active and reactive and trading. I don't like just putting on and going about and waiting on the outcome. I like taking my trade, being rewarded, and then moving on, and then watching for the next setup. So hopefully that's given you guys some insights. Proximal, I know that was a long-winded way of getting around to that about the commissions. I would just recommend using, for test purposes or for running these drills where you're working on your execution here, because it takes time to get comfortable executing like this. I know firsthand, because it took me some time to get comfortable executing like this. A year ago, I would have never thought I'd be looking at the 1 minute chart. Not in a million years. But I recognize that over time, you know, I've spoken about often, like, a big foundation for me was Trader Main and the H12 H1 system, right? H12 market structure, H12 ranges, H12 SFPs with H1, the hourly execution, H1 breakers, right? Things like that. That system really made sense to me from a high level perspective. But when it came down to execution, I found that I was just often underwater quite a bit. And the trades were failing more often than I wanted. Now, it's a system designed for like a 35 to 40% win rate, but where your wins are 2 to 1 or 3 to 1 against the amount that you're losing, it's designed as over a wider sample size to be profitable. I realized about myself that I didn't like existing in that space. I much prefer having a much more granular control over my trades. And this system that I use is a derivative of that. It's just taking it down to the lower time frames, right? Like these breakers that I draw, this M1 breaker, this is the same thing off of a high time frame level Trader Main does with this H12 H1. I just incorporate other things as signal to help me on those low time frames get a better yes no instant feedback, right? Like those market bubbles into a level, using the averages, right? Using the averages, using a few more high time frame levels marked out as guides and trade references, right? Where are we at? We're a little over an hour now. It's a bit of a bummer that I popped off for a few minutes right as this was taking place. I think if you're looking for long in here, let's take a look and see what M5 is doing. Right? Bearish M5 SFP into the moving averages there. Right, look here. Right, like you don't have to do my high time frame levels approach, but I will bang this drum to death on people that it's a massive benefit to you to mark out your high time frame, your H4, H12 daily, weekly, monthly levels as guidelines, so that when price gets there, you're looking for the interactions, right? Like you could just trade, say you don't like doing your high time frame levels the way I do, and you just like this simpler indicator approach. You could even get rid of the key levels, right? And just be like, okay, I'm trading the moving averages and SFPs. That in of itself is a trade career, right? up into, now the thing about averages is it's not a hard line. It's more of a shoreline. It's more of an area, right? So with the averages, if you're saying to yourself, like you have to know, you have to get a good read on bias when you're using averages, right? And the averages help you do that. We're below the longer averages, chopping around the lower or the faster averages, the shorter averages. But when you're getting that sort of reaction, you're looking, okay, I got a signal aligned with what I think the overall bias is still, using the averages, M5 SFP into there, trade it down, boom. Where do the bubbles, where do the aggressive shorters come in? You get that signal, boom, exit. Waiting for your next trade. Okay, we're getting aggressive buyers into and near an average, M5 SFP, boom, right? Like there's different ways to take these same types of trades into the averages, SFP, M5 SFP, boom, right? Now you look at this and you're like, okay, well, because of the way the averages are aligned right now, the longs become less attractive, but you have to learn how to read the indicators and what they're telling you. You know, so the long becomes less attractive. You know, here, that trade didn't really work out. You know, that's not enough of a distance off an M5 entry to take a trade. But you can say to yourself, okay, we just flipped the trend averages. Maybe the short here isn't as good of a call, considering we've already had a dump. Maybe the better move is to wait until we get up into some of these other averages for that short, right? Then you get those aggressive late market buys into the average, boom. Aggressive, very aggressive late market buys into the average, boom. But you have to have a framework for how you're going to take these trades and what you look for. And everything on my chart is aligned with that for myself. Doesn't mean you need to use all these indicators. Doesn't mean that at all. Look at what we're having here, that M5 SFP into that underside retest of those averages, right? So if we come back to M1, you know, I would like to see aggressive positioning into these, which we didn't get there, right? We didn't get that into M5 either. But, you know, you get a holistic view. That's why I have my charts with 6 timeframes visible to me at all times, right? Like when I'm doing these streams, I zoom in on them so that you guys can see what's going on. And this isn't how I view it, because my main workstation is a much larger monitor that I can see this all and everything clearly. Like this one panel here is like a full-size chart on my monitor. Same with all of these, right? So it's having those tools ready at your fingertips at a glance, so that you get a bird's eye and a very zoomed in eye. Like you get your bird's eye and you get your sniper's eye. All right, you get that eagle. Anyways, you know what I mean. So that I can see what's taking place, and we can see, okay, the M15 trend averages keep pinning us. M5 SFP into that when that took place. These are the things you look for. Now see what I was talking about at the top of the show. The long here, get your 2 or 3R and move on. If you held this thinking, oh fuck, we're going to break out, well, now you're break even and possibly about to be underwater, right? That's why it's a very reactive style of trading. You know, maybe this is going to give another long here, but an instant retest like that after such, you know, that doesn't look great. But what do I say? Bullish at the lows, looking for reasons to long at the lows, bearish or looking for reasons to short at the highs. I don't love a second retest like that. I like to be into the trade here. And then the way that I'll get in on a secondary move is, rather than an M1 breaker, if on, say on M5, say this, put in this breaker here, say it closed above here, then I would look for secondary trades off of this level. Meaning I get an M5 close above my breaker, I'm looking to long or retest or just enter off the break, because then the probability goes up. So there's two ways that I take trades. I've spoken about this before. I'm either the initial impact with the signals that I like, or I'm the secondary setup with a layer of confirmation that the trend is reversing. For me, this trade is the best one because you're catching traders offsides. You're trying to counter trade the late FOMO people that were entering all these shorts. Likewise, let's zoom back a little bit over here. You're trying to counter trade all the late FOMO longs that thought we were going to break out. You're trying to counter trend them. You're trying to take their money, right? Don't be these guys. Be these guys after a confirmed market structure break on a significant time frame to the time frame you're trading. But don't be these guys. Wait for the confirmation trade if this is the type of trading that you like to do, right? It's so easy. Like it's very alluring to chase because we got monkey brain, right? It's just like, oh, number go up, I need to long, or number go down, I need to short. And that's chasing. That's what we don't want to do. That's why I have all these indicators and I use my levels, right? That's why I have these things aligned so that in the moment of impact, I'm ready to go. I like this trade more than I like this trade. I would like this trade if we broke the M5 box and then put in another trade here. Doesn't mean this can't be a good long. I'm just telling you why I prefer this trade versus this trade. I hope that makes sense to you all. Next live session will also be a New York Open show, probably on Friday. I'm going to be, I have to set up my BingX interface, the terminal, the way that I like to trade with it. I'm going to be using that a bit for live trades. And I want you guys to join along with me on the journey. So check out that ref code, get those bonuses, get a deposit bonus. They've got a new bonus going on right now that they just sent word to me. Pardon me a second while I go and take a look at what it's all about. Deposit USDT to win up to $4,500 on your Apple product bundle. Interesting. I'll have to dig in a little bit more to that. And I'll share those specific ref links. You know what I'll do? Go and, if you're not already, go and join my Telegram channel, Rapture's Tradebook. Link in the description on YouTube or in my bio on Twitter. I'm posting in my channel right now. I don't want my Telegram channel to turn into a marketing blitz. I'm being really intentional about how I'm going to go about promoting things. And I don't want my channel ever to become just a marketing bulletin board, right? It's where I send my trades, where I share setups. But there is a new bonus going on. So if you're watching live, you can go check that out. But yeah, I'm being very intentional. I don't want my channel to become an advertising or marketing board. It's not what its purpose is. It's to help you guys learn how to trade. Right? I'm not about signals. I'm about teaching you guys how to trade. I'm sure I will lose some people from the channel a little bit as I inevitably do share things related to Bing X or other sponsors if I get other sponsors down the road. But I am very thankful to Bing X for coming on board and sponsoring the shows. It helps me put these on for you guys for free. These take up time and energy and effort. I really enjoy doing them. I enjoy teaching trading a lot and how to analyze a chart and how to get your execution. So if I lose a few people because of that, so be it, because I'm very thankful to them for coming on board. Before we go, let's take a look at Hype real quick, because I just noticed in a group chat someone was saying Hype does not give a fuck about the market right now. It's doing its own thing, right? Hype be doing its own thing. So let's go. I'll switch to high time frame swing setup. Right, I have a different layout for high time frame trades versus my intraday scalping and low time frame trade setups. Let's take a look here. Let's take a look at this Hype. Take a look at weekly. Okay. Still finding rejection at that level. I would still love a weekly retest into here. That hasn't changed for me from Sunday when we outlined that. H12, okay, so we've put in a fresh higher high, right? Although we put in a daily SFP, that is noticeable. That is notable, right? Daily SFP. So immediately when I see that daily SFP, we're saying, okay, do we have, yeah, and there it is. Look at those late aggressive buyers right there, right? Don't be those people. Have a little bit of patience. Here's our H1 breaker after the daily SFP. I don't know. I kind of lean. I don't like jumping in front of the strongest coin in the market to short. Like, it's kind of that's an easy way to wreck City. I'm just showing you what I see here, right? Like, we've had an H12 SF or daily SFP into the range high, a massive fucking wick. There's a chance that a lot of this gets filled still. It's called a backfill, right? When you have a pin bar like this. Shout out to Ryan, where I learned that from. That these type of candles often get backfilled. So it wouldn't be surprising if it fills a little bit more of that. But there's your daily SFP. Here's your H1 bearish breaker. But since we're bullish and we're looking for this particular setup on weekly, I think it would be better just to wait for this rather than trying to short this thing, because it's still the strongest coin in crypto right now. Why is that? Yeah, that should be that. That should be M15. There we go. We can see on the hourly, we're still holding the trend with the averages. M15 is starting to roll over, but it's holding the MA 300. I think rather than trying to be a hero and top tick this sort of thing, even though we do have the daily SFP H1 breaker confirmed, I think it'd be better just wait for a long in here. Mark your weekly. This is a weekly breaker. That's a significant setup. Set alerts as price comes down into here and look for your longs rather than trying to take a hero trade here and try and hero short. I'm also not interested in longing here though either. That's right. That's my view on Hype at the moment. Okay, we're at 1 hour and 20. I think we're going to wrap it up. Did a lot of ranting today, although hopefully from that ranting, you got greater insights into my process. Hopefully that gave you greater insights into my process. Okay, so now we SFP down here again. So now our M5 breaker is here. Now it's a tighter zone, right? Like if you're waiting for that secondary trade, the break is a little bit tighter in than it was off of the original M5 breaker. Like, these are the adjustments you have to make. Monitoring price action in real time. You need to be fluid and adapt to what you see. Again, though, this was the optimal trade for me. as a first impact trade. The next best trade is an M5 close above this box. Look for a retest. There's nothing here for me to trade at the moment. So on that, we're going to wrap it up. I hope you all enjoyed today's session. Hope you got a lot of insights and valuable insights. I didn't take a trade today live. Missed this impact. I had a conversation IRL, which is unfortunate, but hopefully you gained from this the knowledge of how I approach that, right? This is why those high time frame levels are important. Look at how precise that shit is, right? So hopefully you've gained insights into my approach here, right? And what did I say about taking your 2 or 3R and closing in profit? Well, if you held that, you were underwater, possibly stopped if you just set it just below that, right? Whereas if you take that moment of impact, you got your trade. I look forward to our next live session. I believe it's going to be Friday morning. I like this 9:30 window, this 9:30 a.m. window. So maybe we'll do that again so we can catch the opening bell and see that initial price action and see if we get that initial volatility trade, right? Oops. Let's pop this back up again real quick. Well, I want to thank you all. Once again, I am Rapture. This has been Rapture's Scalp and Swing Sessions number 10, the New York Open Show. We looked at BTC ETH, Sol, and Hype. Really dug deep into what those low time frame executions look like for me and how we get those trades and what the conditions that we're looking for to align are like. Don't forget, if you're looking for a new exchange, BingX, code Rapture for sign-up bonuses and extra perks. Shout out to BingX for helping me put these shows on. Really appreciate you guys. I am Rapture. Oh, and don't forget to like, subscribe, and comment. Oh man, the things I have to come out of my mouth these days. But you know what? I do it for you lads. So have yourselves a wonderful rest of your Wednesday, and we will catch up again soon. I'll share some charts in the Telegram a little later. Ciao.